In this lesson, we're going to go over an income statement example. Schrute Farms has sales of $795,000, cost of $345,000, depreciation expense of $76,000, interest expense of $41,000, and a tax rate of 35%. What is the net income for this firm? That's the first question. Suppose the firm paid out $56,000 in cash dividends. What is the addition to retained earnings? So that's the second question. We're going to focus on one question at a time. So we're going to start with our first question. What is the net income for this firm? Since we're looking for net income, it's a good idea to put together our income statement. So our basic income statement template is sales minus cost minus depreciation. That gives us EBIT. We then subtract interest because EBIT, earnings before interest and taxes, tells us what the next thing to do is. So we're first going to subtract interest and then we're going to subtract taxes. So we'll subtract our interest and we're left with earnings before taxes or taxable income. Then we subtract taxes. That leaves us with net income, which is the answer to our first question. And since we were also asked for the addition to retained earnings, we also then went ahead and subtracted dividends on our income statement template and then had our final total for addition retained earnings. Even if you haven't fully looked at the information in the problem yet, you've just kind of skimmed it and read it for the first time, it's a good idea to make your income statement template first. Then you can go back and fill in the pieces that you have. So let's see what we have. The first thing we need on our income statement is sales, and the problem tells us that we have sales of $795,000. So we'll go ahead and plug it in on our income statement template. So now that we have the $795,000 on our income statement, the next thing on our income statement is costs. So if we go back to the problem, it tells us that costs are $345,000. So we'll also put that on our income statement next to costs. So it's that line item. Our income statement then says we need depreciation. If we look at the problem, we're told that depreciation is $76,000. So we'll put the $76,000 in our depreciation line item. Now we're ready to subtotal earnings before interest and taxes, which remember we also call our operating profit. So that comes to $374,000. That came from $795,000 minus $345,000 minus $76,000. The next line item on our income statement is interest. And if we look at the problem, we're told that we have interest expense of $41,000, so we'll plug that into our income statement template, and that allows us to then calculate earnings before taxes or taxable income, which comes to $333,000. So that was $374,000 minus $41,000. Now we're ready to subtract taxes. If we look at the problem, it doesn't give us our tax expense, but it does tell us that our tax rate was 35%. So it's a good idea to put that in our notes on our income statement template so that when we go back and look at the problem, we know which tax rate we used. So the tax rate we're going to apply then is 35%, and we apply it to our taxable income of $333,000. So that comes to 0.35 once we convert that percentage to a decimal, and then we multiply that by $333,000. That's going to give us $116,550. And we'll subtract that from the $333,000 of taxable income. That gives us net income of $216,450. So now we've answered the first question, what is the net income for this firm? It's $216,450. Now we'll move on to the next question, what is the addition to retained earnings? So to calculate that, we need to subtract a dividend, and the problem tells us that we paid $56,000 in cash dividends, so we'll put that on our income statement template, and we'll subtract the $56,000 dividend from our net income of $216,450, and that means our addition to retained earnings is $160,450. So the $216,450 of net income all belongs to the shareholders, and as the board of directors, we chose to pay $56,000 of it to them in cash, and the remaining $160,450 goes into the balance sheet under accumulated retained earnings, which is part of equity. So all of the $216,450 belongs to the shareholders. I want to make a note while we're here about how we calculated the taxes. Whenever you're using a percentage for calculation, always convert it to a decimal first. So the way that we convert the percentage to decimal is we move the decimal 2 places to the left. That's how we got the 0.35. So always convert percentages to a decimal whenever you're using them for calculation.